Now let me tell you about capital and finance account. As the name suggests, it is divided into two parts: capital and finance account. Capital account. The capital account includes only unilateral transfers of capital, such as the forgiveness of one island debts by the government of another island. In most cases, the capital account is a very small, almost negligible item on the balance of payments. Finance accounts. The financial account is far more important since it includes all other financial transactions, such as cross-border trades of stock and bonds. Let's look at the items listed under the financial account one by one. Net foreign direct investment, or FDI, involves the cross-border purchase of an equity stake in a company. A stake large enough to give the new owner managerial influence in the company. When X island firms buy substantial stake in Y island for scaling its business operations, this represents X island FDI in the Y island. Portfolio investment, also referred as foreign institutional investment, involves cross-border purchases of stocks, bonds, and other financial instruments. Please note that in case of portfolio investment, the shares concentration is not as substantial as to allow managerial influence. Portfolio investment is sometimes referred to as hot money, since portfolio investors can often liquidate their holdings and exit a country at almost a moment's notice. When X island investment banks and hedge funds buy shares, bonds, and other financial instruments in Y island, it is referred as foreign institutional investment. Changes in official reserves reflect increases or decreases in the government stockpile of monetary gold and foreign currencies, that is, foreign exchange. Finally, errors and omissions is a residual category, reflecting statistical discrepancies in the compilation of BOP data. Let me tell you one Guru Mantra, which will help us in understanding the accounting of BOP statements. Every source of funds, that is, foreign exchange, is a credit, while every use of funds is a debit. On the current account, exports of goods and services to abroad, incomes receipts from foreigners, such as interest, dividends or compensation, and unilateral transfers from foreigners are all credits because they all may be thought of as sources of foreign exchange. Conversely, imports of goods and services from abroad, payments of income to foreigners, and unilateral transfers given to foreigners are all debits, since they all may be thought of as uses of foreign exchange. On the financial account, the same basic rules apply. Foreign purchases of domestic financial assets, which constitutes a capital inflow, lending from abroad, are recorded as credits, since they provide a source of foreign exchange. Domestic purchases of foreign financial assets, which constitutes a capital outflow, lending to foreigners, are recorded as debits because they are use of foreign exchange. Following are the rules and examples of debits and credits on a balance of payments statement.